I'm here today to give you another update on what is happening in the workers' compensation market, both in Missouri and in surrounding states. First, I'd like to start off by pointing out that the market itself in Missouri is still very, very healthy, as it is in the states around us. In fact, in the state of Missouri itself, we have over 100 insurance groups representing 300 individual carriers that are writing workers' compensation in our state. The market in Missouri has grown to be over $1 billion again. And of those carriers, MEM is 21% of the market share. As you know, we were formed at a time when loss frequency was climbing in our state, and loss frequency on non-fatal claims had gotten as high as 8.1%. So to put that in perspective, 8 out of every 100 workers in the state of Missouri were experiencing an injury. That is now down to about 2%. And a good deal of that impact is from a focus on safety, which you all know MEM is very big in terms of our focus on workplace safety, our mission of getting workers home at the end of every day safely. But when an accident occurs, we put our resources towards making sure that that injured worker gets returned back to a productive life as soon as possible. And we do that through a whole host of services that we have, our own in-house nurse case managers that we use, what we call our safety and risk services teams that actually go out and provide on-site safety service to insureds. And we also do that for association groups. So our safety services are things that are available to associations, even if all their members aren't insured by MEM. But back to the profitability. Not only is Missouri and the surrounding states a sizable market, but for the at least now 10 years in a row, the industry has posted a combined ratio less than 90%. So to put that in perspective, every dollar of premium that is collected, 90 cents is being spent on losses and expenses. But overall, the industry is very, very healthy. We're seeing declines in loss frequency continue. Now, having said all that, it almost seems a little counterintuitive when some of our surrounding states are seeing rates continue to decrease. We just saw Missouri through NCCI, and it was approved by the Department of Commerce Insurance, a 1.3% loss cost increase for 2026. That seems a little counterintuitive when you're talking about how great results are, but yet loss costs are climbing. Well, what we are beginning to see and what drives loss costs are really two things right now. We're seeing an increase in the utilization of services. So what that means is before, when we had an injured worker who would go and get physical therapy, maybe they would go for 5 sessions. Well, now we're seeing those injuries result in 8 sessions or 9 sessions. So utilization of services is increasing. The other thing that we've seen in Missouri is that the cost of physician services is also increasing. So while frequency of loss is going down, we're starting to see some of the components of costs going up. And so that resulted in a slight increase in the loss costs in Missouri. Again, in some of our surrounding states, we're seeing single-digit decreases. So overall, it's still an indication of a very healthy market in our area. Now, some of the things that we do at MEM to help our insureds keep their costs down, again, the loss safety services that we provide, trying to prevent losses from even occurring. We have our own in-house nurse case managers who reach out to injured workers to make sure that they are getting timely and needed service. That helps keep costs down. And through our own network of services that we've negotiated, we have some of the most cost-effective pharmacy programs that are there. We also work with our insureds to drive return-to-work programs, because it's been shown that if you can get a worker back at work, even if it's in a job that's not what they were originally at while they're in that healing process, it actually will slow down the cost increases over time of that injury. So we do focus on that sort of control as well. But again, our mission has always been about getting that worker home safe at the end of the day, and that hasn't changed. Now, some general comments about the economy. There's some interesting things happening right now. Where we were seeing payrolls grow at 8 to 9% after the pandemic, they have slowed down tremendously. We've now seen payrolls only increasing at about 4% year over year. Another thing that's happened is job growth itself has probably now stagnated. Earlier in the year, we were reporting job growth numbers But when those got adjusted, it actually showed that there was a net decrease in jobs over the summer. So a unique thing starting to happen. I'm sure you've seen the headlines yourself of, large industries and tech companies laying off thousands of workers. That will continue to put pressure on payroll, and payroll drives workers' compensation premium. So over time, there will be a little bit of pressure starting to form on workers' compensation premiums as you have less payroll to fund the losses that do occur. But something else unique is happening as well. When you have layoffs, and we've seen this in previous recessions, lost dollars, number of claims, actually goes down for a while. And that seems a little strange, but the reason is that a lot of companies, when they have a layoff, they actually let the least experienced employees go first. So what you have left then is a workforce that's more experienced, knows their jobs, knows the safety around those jobs, and so they have less of a loss chance. So it's a little bit of a unique situation that you have when you have a recession. But there's now sort of a countervailing wind that's starting to blow, and it has to do with remote work. So as you know, in the pandemic, a lot of workers went home and continue to work as hybrid employees. But something that we have seen happen now is that the increase in frequency of remote workers is a real thing. You go, well, how's that happening? Well, ergonomics is part of it. So we talk to employers about how important it is that they make sure that they have the proper ergonomic setup for their workers, not only in the office, but if they have workers at home, it's very important that they know what their home office setup is like as well. It is something that, I would encourage you to work with your safety and risk services consultant. There are ways that you can have programs that actually look at the ergonomics of your home-based workers. And I think it's important to do so because that is an area where we're starting to see a little bit of pressure on losses. But overall, the market continues to be a very healthy market. It's very profitable for the carriers that are here. Rates are low and competitive. It makes Missouri and our surrounding states a very good area to do business because our insurance rates are some of the best in the nation. And again, if you have any questions, please reach out to us, reach out to your agent. We would love to consult with you on how to make safer workplaces.